Short selling gets a bad rap, but if the market's got you frustrated, confused, or downright angry about how corrections happen, listen up. This is exactly why you can't ignore what short sellers do. The truth is, when the market slips, when everything you've built feels like it's slipping through your fingers, short selling is not the villain. It's part of the system trying to get real, trying to clean the crap built on hype and lies. Here's the brutal fact. Markets don't correct because people just wake up and start selling. They correct because short sellers force the truth to the surface. They call out the overvalued, the weak, the frauds nobody wants to face. If you ignore them, you get bubbles that blow up bigger and leave you crushed. So yeah, they stir the pot, sometimes hard. But that's the point. They blow the smoke away. If you're tired of getting blindsided by market crashes, the first thing to do is stop demonizing shorts. Instead, understand how they operate. These guys create pressure where there's weakness, and that pressure forces bad actors out, or forces companies to clean house. This is your shot to get ahead. Look at what the shorts are targeting, not as a threat, but as an early warning system. Listen when you see heavy short interest piling up on a name. It's a yellow flag screaming instability. Use that. But don't just watch from the sidelines. Use the pressure shorts create to fuel your own moves. When short sellers push down a busted stock's price, cash in if you're right. Or better yet, get into those positions early, before the market folds into reality. Hedge funds don't just short to destroy, they do it to reposition and profit when the market cracks open. You want to be playing that game, not sitting there holding bags while everything burns. Most people miss this. They don't realize that strategic short selling isn't some evil trick to tank the market. It's a tool for market integrity, a way to flush out excess bullshit, greed, bad management, and unearned valuations. You can't stop it, but you can use it to your advantage. And if you're a founder, hear this loud and clear. Short selling holds you accountable. It forces you to build real value, or the market will punish you mercilessly. Here's what you do next. Stop fighting short sellers. Instead, study their moves. Track short interest like a hawk. See where they're growing bold. That's where the market's about to test itself hard. Then, hold your nerve. Don't panic sell. Instead, rethink your investments around their signals. Hedge funds don't just short to make money. They short to expose cracks. That insight is your edge. And please, don't get trapped in the usual fantasy that markets should never go down sharply or that short sellers are stopping growth. Market corrections are ugly, but they're necessary. Short selling speeds it up, but also limits the damage in the long run by getting prices aligned with real value before the fall gets catastrophic. Finally, remember this. No one owes you a smooth ride. The market is brutal and indifferent. Short selling is just part of that brutality. Your job? Master how to move with it, not against it. Use it to spot real risk, to profit off collapse before it happens, and to push founders and companies to build something that lasts. If you do that, corrections won't be your nightmare. They'll be your opportunity. So stop whining about short sellers wrecking your fair market. Get smart, get gritty, get in the zone. Because when the market corrects, it's not punishment, it's survival. And if you're watching this, you don't just want to survive, you want to dominate. Subscribe to our YouTube channel and check the featured link to discover more.